Now, the UK economy grew for the first time in 3 months in November, but came in at half expectations at 0.1%. The Chancellor, Rachel Reeves, said that she is determined to go further and faster, to kickstart economic growth. CNBC's sister channel, Sky News, spoke to the UK Business Secretary, Jonathan Reynolds, about what Trump 2.0 could mean for the British economy.
Well, I think it's going to be a challenging time for anyone who is responsible for trade in a big economy because of some of those pledges that were made in the campaign. But look, I think there's opportunities for the UK in this. There are lots of things I, as the Business and Trade Secretary, would like to see the UK doing more closely with the US in areas like technology, digital trade, in services. So if there's an offer from the US to talk about how we could collaborate closer together on that, of course we take that up.
Are you worried about a tariff war?
I am, because the UK is a very globally orientated economy, so the exposure, the danger to the UK is actually greater than even some comparable countries around that. So a lot of our work has been preparing for that.
Meanwhile, the Bank of England may need to cut interest rates as many as 6 times this year amid a stalling economy. That's according to external MPC member Alan Taylor, who said the BOE's gradual approach implied 4 cuts, bringing rates to 3.75% by the end of the year. He added that recent UK data showed an increasingly gloomy outlook for 2025. And we have some of UK assets on the screen right now. Let's get a check on how we're faring. We have the FTSE 100 higher by about 0.6%. All in all, though, the sterling under pressure, however, down about 0.3% against the US dollar. Let's discuss all of this with our next guest, Martin Weale, Professor of Economics at King's College London and former Bank of England MPC member, is joining us today. Great to have you on the show. First and foremost, I just would like to get your experience as a former member of the Bank of England here. When you think about the CPI print you obtained today, the latest GDP figures coming in this morning, would you be cutting or actually suggesting to the Bank of England to keep rates on hold on the 6th of Feb?
Well, I wouldn't be rushing to cut. I think what Alan Taylor says is quite correct about growth being weak. And there are some positive indications that inflation is sustainably staying at close to 2%, which of course is the Bank of England's target. But at the same time, the UK is subject to international disturbances and so on. And in particular, sterling's weakness obviously does have an impact for the cost of living in Britain. And the MPC will need to take that into account.
I was interested in this latest comment from Alan Taylor, suggesting that perhaps we could still see the Bank of England cutting 6 times. What would you take to actually see the Bank of England going ahead with so many cuts?
Well, I think what it would take would be that the indicators of inflation that are still above target, services inflation, for example, or still incompatible with the target, services inflation, growth of wages and so on, though the Bank of England would need to see those falling back into a range that was consistent with the 2% inflation target. Now, Alan Taylor is saying that they're well on their way there, and I hope he's right. In that case, the Bank of England or the MPC would be able to cut rates substantially without the risk of rekindling inflation. But obviously there remains a lot of uncertainty, and to be penciling in now a cut at almost every meeting, it could turn out to be what happens, but who's to know what the situation will be in the autumn of this year?